So you think you're smarter than the market, going long microchips to ride out the AI boom, or buying the dip in renewable energy. I've been there, and after a decade of investing mistakes and achievements, I will humbly admit that I am not smarter than the market. In this video, I'll share an investing strategy that I use to grow my wealth consistently with minimal risk. Then I'll talk to ChatGPT and make sure it likes the strategy as well. I'm Alex. I'm a data engineer and product developer. If you're building online or looking to optimize your work or life with technology, I think you'll like my stuff. Before sharing the 6 stocks in my investing strategy, I'm going to talk about what I mean by the market. And when I talk about being smarter than the market, what I mean is trying to pick individual stocks that are going to outperform broad market index funds. The prototypical example is the S&P 500. You're getting access to the biggest companies that the most people are invested in, or at least the companies that have the most money invested in them. We're talking about Apple, Microsoft, Amazon, but also companies that are in healthcare, that are in financials, that are in energy, that are in consumer staples, stuff like Home Depot or Costco. But the S&P 500, even though it's composed of 500 different stocks with a huge amount of diversification, only gets us access to the US economy. We also want exposure to the rest of the world, so like Europe, Pacific, and emerging markets. I'm a Canadian, so I want access to Canada. If you're a Canadian, you could check out this video on 7 stock picks to own the world from Canada. Now, when you're trying to be smarter than the market, or you're trying to pick individual stocks, you're saying that I'm rejecting what most money is going into, and I'm going to put my money in a place where I think we're going to have more growth than the average dollar. The typical person who opens their own investing account will invest up to 80% of their money in individual stock picks. If you've found this channel, I bet you're the type of person who has a pretty good idea of where the world's going. You think you know more than the average person, and I think that's fair. The problem is the market doesn't move with the average person who's investing. The market moves with the average dollar invested. What that means is that the biggest hedge funds, the most smartest billionaire advisors, the most highest paid people in the world are the ones who you're competing against. Those are the people who are investing the most money, and those are the people who are moving the markets. Canadian David Chilton, and author of The Wealthy Barber, puts it this way: to outperform the market's return, you have to outperform the majority of others who are also trying to outperform the market's return. Now, I agree with that concept, but like I've just been describing, I would slightly modify the language here. What I would say is to beat the market's return, you have to beat the majority of hedge funds and industry-leading financial advisors who are also trying to outperform the market's return. And if you ask me, that's completely terrifying. Now, the good news is the solution is extremely easy and takes way less time. Now, if you're still not convinced, let me share a cold, hard quote from the investing legend Warren Buffett. He says, "Most investors, both institutional and individual, will find the best way to own common stocks is through an index fund that charges minimal fees." These are called ETFs. Those following this path are sure to beat the net results delivered by the great majority of investment professionals. Finally, the moment you've been waiting for, or maybe just the moment you skipped to after watching the introduction. That's cool. We're talking about 6 stocks that you can use to own the world. What we want to do is get access to the US market, Europe, emerging markets. I want also access to gold and cash. This is not financial advice. I'm just sharing this video for informational purposes only. Of course you need to do your own research. Of course you need to understand the things I'm telling you. Of course you should seek advice from an actual financial advisor. The first thing I want to do is ask ChatGPT how to create that portfolio. Let's see what it says. It's giving us an ETF for cash investments that's going to give us exposure to bonds. It's given us a US ETF for the top 500 companies, this S&P exposure. It's given us one for Europe, one for emerging markets, and it's given us this SPDR Gold Trust ETF for gold. This is a really great starting point, and it looks very similar to the portfolio I'm about to share with you. So let's show you what I've put together. The stock that I picked to invest in cash is the Bloomberg 1 to 3 month T-bill ETF, ticker symbol BIL. It provides access to US Treasury bills that are constantly maturing, giving investors access to a steady stream of income. This stock right now is yielding about 4% per year. The next stock we're looking at is the iShares Core S&P Total US Stock Market ETF. This ticker symbol is ITOT. We can see its biggest holdings are the biggest companies in America by market cap. And if I look at the bottom, I can see that there's 3,000 stocks that make up this market fund. Now, in order to get access to the top 500 in a heavier weighting, I also picked another US ETF, which is the iShares Core S&P 500 ETF. As you'd expect, this one just has access to the top 500 companies. The next stock I picked is the iShares Europe ETF, ticker symbol IEV. In this ETF, we're getting access to the biggest companies in Europe. And I'm going to scroll down to the exposure breakdown, where we can see that 23% is from the United Kingdom, about 20% is from France, and after that we have Switzerland, Germany, Netherlands, Denmark, Sweden, Spain, and so on. The last index fund we're looking at is the iShares MSCI Emerging Markets ETF, which is ticker symbol EEM. You can see some examples here. We're recognizing things from India and from China. And if I look at the exposure breakdown, we can see that those are the two biggest countries, followed by Taiwan, Korea, Brazil, Saudi Arabia, South Africa, and so on. This ETF is going to have a higher fee than the others we've been looking at. Typically, the more specialized of an investment you're looking to make, the more niche of a market, the higher the fee is going to be. The last ETF in the portfolio is gold. It's the SPDR Gold Shares ETF. This one is the first US list ETF that's backed by a physical asset. This gives us access to physical gold that somebody owns, but we don't have to actually own it and pay for the purchase and worry about the storage and then pay for the sale. The fees instead are extremely low, and we get access to the underlying asset of gold. I've got a URL here for finviz.com, which I'll place in the comments. If you click on this, you'll get taken to this page where we can see a bunch of stocks compared to one another. The first stock on our screener is BIL. This is our cash fund. As you can see, it has a very inorganic performance. What's happening here is that as the month goes on, the value in owning the stock goes up because you're getting closer to when the dividend is going to be paid. So the price also reflects that. As soon as the dividend is paid, the price drops down. We should also note that this is a very small range if you were to open up the y-axis here. The next fund is EEM. This is our emerging market. You can see that it's been pretty volatile within this range of 38 to 42. The next is our gold fund. Gold's up on the year. Next is IEV. This is our European fund. It's been seeing steady growth. Now we have ITOT. These are our top 3,000 companies in America. And then IVV, which is the top 500 companies in America. It's time to talk with ChatGPT and see what it thinks about this investment strategy. Let's discuss the prompt I'm going to use. I posted this first in my previous video, which you can find here, but we're going to look at this prompt in a little bit more detail today. I'm starting out by asking it to be a financial advisor, and I'm telling it that its goal is to evaluate equity portfolios using a step-by-step method. I want to trigger it to ask me about my portfolio and every stock along with their percent allocations. I'm also being careful to ask it not to talk about what it's going to do, because it has a tendency to talk a lot. So it's helpful to put in these guiding prompts to get better output. Step one is to interpret the portfolio and make sure that all of the stocks we put in are actually totaling up to 100%. If it starts doing analysis and we haven't actually provided 100% portfolio allocations, it's going to renormalize for us. Step two is to analyze the portfolio's potential for strong returns over the next 20 years. I'm also careful here to not get it to talk too much, but just tell me the summary of what it figured out. Next, we're going to provide a rating on different metrics. The metrics I was interested in are the potential for growth, the diversification, and the safety of the portfolio. For each metric, I'm also asking it to provide specific stock recommendations to optimize that. The next step is the one that I like the most, where it provides what it thinks is the optimal allocation for each stock in the portfolio. I've been specific about how I want the output to look for this one. And lastly, probably the most exciting step, I'm asking it to write code that we can use to backtest our portfolio against the S&P 500. We're going to see if our portfolio can beat the average market S&P return. Let's run this prompt through ChatGPT and see what it tells us. Of course, it's happy to help. It's asking us to plug in our portfolio. For step one, it's seeing that we've properly allocated up to 100%, so there's nothing for it to do. Hopefully it's understood everything. In step two, it actually didn't provide us a summary like I asked for, but it did say that it analyzed the portfolio's potential. So that's good, I suppose. Let's look at the next step. It's telling us a 7 out of 10 potential for growth, an 8 out of 10 diversification rating, and a 9 out of 10 safety score. I'm really happy with this take because I think we have got a more conservative portfolio here that should be very safe and should track the market as good as the economy does in the world over the next 20 years or beyond. Next, we've asked it to give us the optimal percent allocation for each metric. If we're looking at potential for growth, it wants us to invest less into cash and more into the other market funds. It's also put the EEM up to 20%, which is going harder into emerging markets, which is a risky thing to do, but will give you access to more growth potential if those markets do well. For diversification, we can see that it's kept everything very close to what we asked it originally. It's dropped the cash to only 10%, which is a little bit lower than I would feel comfortable holding. Lastly, for safety, it's ramped the cash back up to 20%, and it has lower allocations in each other stock. It actually has a high allocation of gold. For step 5, it hasn't actually gone ahead and written us any code. So I'm going to ask it to reevaluate that step. Now it's gone ahead and written the code that we can use to test this. It's also given us code to plot the returns so we can see visually what this might look like. I'm going to go ahead and run this right now. If you don't have Python installed, you'll need to do that first. I already have Python installed, but I just need to make sure I have the right libraries. So I'm going to pip install. There's a YouTube Finance library that I need. It's called Y Finance or Yahoo Finance. Looks like I already have that one. I also need Matplotlib. Looks like I have that too. So now I'm going to run this script and I'm going to call it ChatGPT advisor.py. And I'm going to paste that code in. Let's quickly walk through the script. We're importing Y Finance. This is going to get our market data from the Yahoo Finance API. Next, we're bringing in Matplotlib. I'm going to hop down to that part. we're plotting this right in the script, which ChatGPT has done for us. That's going to be really cool. I want to see how this looks. Otherwise, a lot of the script is identical to the previous video, and if you've watched that, you know that there's something coming. Let's go ahead and run it anyway and see what happens. Okay, so this is the plot, which looks fantastic at a glance. It's showing us the cumulative returns. So 10 years ago, if we invested $1, we would have $3 today, depending on which we picked. Some of these would have yielded us a lot less than $3, but actually none of these funds have given us less than $1 back, which is great. Now, it's not totaling up our portfolio, it's broken them out into different colored lines. And the S&P 500 is in pink here. And then there's another line which is blue that I'm not really sure what that's representing. So there would be a little bit of work to tweak this and get it showing how we want. Now when I X out of that, the script is going to continue running and it'll give us an error. I'm going to try telling ChatGPT about the mistakes it's made and see if it can give us some better script. I'll say the portfolio and benchmark returns are not calculated properly. And I'll say they are not weighted using the percent allocations in the portfolio dictionary definition. You're absolutely correct. I apologize for the oversight. To calculate portfolio returns accurately, we need to consider the weighted allocations. All right, ChatGPT, always gracious, seems to have fixed the problem. Let's plug this in and see if it is fixed or not. But I don't quite trust it, so I'm gonna take a look. Same code to start with, but now we've imported pandas as well. That means we'll need another dependency. I'm gonna make sure, oh no, pandas. I already have pandas, so I'm good to go. That's interesting, let's see where it's using that new dependency. This step, I can tell, is multiplying our returns by their percent allocations before summing them up. That's exactly what we need it to do. So it's actually gone in and found its mistake and fixed it. Next is calculating the cumulative returns. Now it's going to provide our plot. So we'll see if our plot is subject to the same issue where it breaks everything out into a separate line, or if it's properly compared it with the S&P 500. This line doesn't make sense to me because we're subtracting 1 to get the total return. I don't think that's right. So I'm just gonna comment those out for now. We'll see what it provides us as our returns, and maybe we'll come back to that line. Let's see how it does. I've got high hopes. It was so gracious and nice. Cool. This is exactly what we're looking for. Our portfolio returns are plotted in blue, and we can see that those reach up to about 1.8. As in, if we invest $1, we can get $1.80 out after our decade of waiting. But if we invest in the S&P 500, we're seeing that we get about $2.50 out after our decade. So actually, the portfolio we've discussed in this video, which is for information purposes only and not financial advice, is underperforming the S&P 500. We have to keep in mind, though, that historical performance does not indicate future performance, and we want diversification here. The fact that it's comparable is really good news because we have a safe bundle of investment vehicles that can now perform with less volatility, and might even outperform the S&P 500 in the next decade. So if I close this, it'll finish its calculation, and it's telling us, yes, good. Okay, so it's telling us our portfolio performed about $1 gets us $1.80. S&P 500 gets us $2.60. That's exactly what I expect. So I think I was right to adjust the code a little bit. And it's telling us that we underperformed the market of the S&P 500. That's really cool. This is really cool stuff. I think ChatGPT is nothing short of amazing, and it's showing its capabilities here really well. So what do you think? ChatGPT did pretty good. If you'd like to get this prompt so that you can ask it about your investments, or maybe a modified version of what we talked about today, you can go ahead and look in the description. I'm Alex. See you next time. All right, I'm calling it.